we continue to be very conscious that over the last 2 to 3 years, there's been very significant market development efforts going on around new products, new frameworks, new initiatives. But the level of actual uptake and application of many of these new solutions has been significantly lower than was expected. So we continue to work very progressively with our market stakeholders to try and turn the tide, build deeper understanding of what the markets are now capable of doing. I think we still have a lot of historical thinking on remembering when our market was purely an equity and debt market, and not that much continuous knowledge about all the new instruments that are now available. So we look forward to working with all our different market stakeholders to make sure we build that understanding and we can move to an environment where there is much more creative use of the capital markets to solve the very real financing problems that our market and our economy and frankly our region continue to face.
The kind of fintechs that we have operating and those that have really approached us as the authority, you'll find most of them are around payments and lending. So you'll have more of peer-to-peer lending platforms, and there's that realization that we can't, in as much as we've said we want to focus first on capital market specific fintech like equity crowdfunding and robo-advice and high frequency trading. The reality is that you'll find innovations that span across insurance into payment, that's the banking sector. So very often we get inquiries, both locally and internationally. We've even had inquiries on setting up of or facilitating a fintech in the form of a waqf, that's an Islamic fintech that's basically focusing on charity. We've had various other very complex and even simple types of fintechs. So our realization was, even as we first begin with one within our jurisdiction, we cannot lose focus of the fact that it might be ideal in the longer term to have a regulatory sandbox for the entire financial sector.
Look at Kenya's competitiveness. The view is often that commercial enterprise can plan and can plan around whatever tax environment you have, whatever policy environment you have, because they have certainty, and then they can build their products around that. But where we continuously are changing the relevant policy, the tax environment, or it becomes very difficult to plan, and we continue to see very much a wait and see approach to our markets. I think looking back from about the year 2014, where the NSE was, I think, the third best performing exchange in the world, that was really running on multiple years of fairly stable policy and fiscal environment. But soon thereafter, first with the capital gains tax uncertainty, then you had the uncertainty around bank resolutions, then you had the uncertainty around the treatment of the debt market, then you had the uncertainty around an FSA, and is it coming, is it not? Then now you have uncertainty around Financial Market Conduct Authority. All of that all adds to, I think, investors' ability to make concrete decisions. When you look at the capital markets, they're in their very nature long-term investments. So I think we'll continue to work very progressively to make sure, as we position Kenya as an international financial center, we can really advocate for the greatest amount of stability and transparency in our overall policy environment.